create passive income and to use to meet your wealth goals. Let's see there. Okay. And here's my contact information. And let me also add that Prudent Consulting does not provide legal, tax, investment, accounting, or other professional advice. If you need that type of advice and assistance, please use the services of a competent professional. All right, we're going to talk about 3 different investments today. We're going to start off with precious metals. We're going to talk about real estate, and then we're going to talk about trust deeds. Precious metal investing is something that's been done for thousands of years. It is counterintuitive. Usually when the stock market crashes, precious metals do well. You can check back in 2008 and see how that worked. But the most important thing on your investing is to protect your principal, and you can certainly do that with precious metals. You can invest in many, many different ways. You can use your money for stocks, for bonds, mutual funds, real estate, treasuries, and annuities, and of course the precious metals. Okay, here's a little graph that talks about the stock market. You guys have heard about the quantitative easing that's been going on for the last 3 or 4 years. Many people believe that the stock market is being held up by that quantitative easing. It was almost to the tune of $4 trillion, an almost unimaginable amount of money. Some people think that when that ends, which it has recently, that the stock market may take some adverse action. That will still remains to be seen. Okay, here's a graph that compares bonds to inflation. You can see that if you invest in bonds, you get a fixed rate of return, and bonds historically have not kept up with inflation, unlike precious metals, which has actually paced inflation. Now, we do have to talk about real estate versus metals, just to give you a little contrast here. Real estate, while it is a great investment, and you can certainly make money in real estate, it is not liquid. If you want to cash in precious metals, whether it be gold or silver, you can do that immediately on any forum and obtain liquidity right away. Real estate, you're going to have to sell. It's going to have to be refinanced. And of course, when you're selling real estate, you don't want to sell when the market is low. You want to sell when the market is high. If you need your money immediately, you may not have the option of waiting to do that, unlike precious metals, which can be liquid immediately. Okay, diversification. We talk about diversification a lot in investments, and diversifying your investments is a way to protect your wealth and your retirement funds. Gold and silver, again, will help you keep up with inflation. It's something that's been going on for just thousands of years, and a lot of people feel very comfortable having a certain portion of their portfolio in precious metals. I think 5 to 10% is actually about the only amount that I would do. All right, let's talk about real estate investing, one of my favorite topics. Here's the advantages to owning rental property. The government wants you to own rental property. That's why they give you all these advantages. You have the mortgage interest, which is deduction, any expenses, insurance, property tax, plant management fees, and on top of that, they allow you to actually take a phantom loss called depreciation. And the reason the government wants us to invest in real estate, the reason they make it advantageous to us is because they want us to provide clean, safe housing for people so that the government doesn't have to do that. They know that private enterprise and entrepreneurs like yourself can do this in a much cheaper way and much more efficient. Okay, let's keep this in mind always. It's not how much money you make that counts, it's how much money you keep, which is why you have to invest in real estate for part of the diversification, because it allows you to shelter your money. It allows you to take tax deductions, and there's appreciation that goes on with the property and the appreciating rents at the same time. You can buy and hold, or you can flip properties. I am a buy and hold and believe that is the best way to invest in properties. You have multiple streams of revenue from different properties. You usually get double-digit returns before your tax benefits. Tenants are the ones that actually pay off your loans. Depreciation works to your advantage. Worried about inflation, but if you own a lot of real estate, inflation is actually your friend. Inflation takes place, property values will rise, and your rents will rise. You can also use buying and holding by using other people's money and OPT, which is other people's time. Leverage real estate, whether it's in your retirement account or outside your retirement account, and you don't have to spend a lot of time managing it because you have property managers, and that's OPT, other people's time managing your investment. I have property throughout the United States, and I probably spend 6 to 8 hours a week managing that property. What I do is I manage my property managers, not actually the property themselves. Okay. Managing property manager. Why do you want to use a property manager? Because nobody wants annoying calls in the middle of the night, especially if you own property out of the state, the time difference. I don't want to receive phone calls telling me that the toilet is broke. I want the property manager to get those phone calls. And quite frankly, I'm not a very good property manager. I do manage my properties here in California because they're close to me. But a property manager is a no-nonsense type person. I tend to fall for the, your rent's late for, because my kids need to have the dental work done or whatever it is. And, I'm just not a very good property manager. So hiring property managers is actually a no-brainer for me. Here's my rule of thumb, and I hope it's everybody's rule of thumb. Live where you want, invest where the numbers make sense. I haven't invested in California properties since 1989 because of this very reason. The numbers just don't make sense to me. That's why I invest out of the state of California. But I choose to live in California because I love the climate. I love the state. My family is here. But my investment money now goes on outside of the state of California. All right, let's talk a little bit about trust deed investing. What is a trust deed? Well, a trust deed is a ownership in a piece of the property. It shows that you have that ownership. It is on file at the county recorder's office. It's there for everybody to see, and it protects you. The trust deed is what protects you in case the person doesn't make the payment because you are the one that is loaning the money to that person. Okay, the benefits of trust deed investing are many. It's a secure investment because, like I said, you have a trust deed on the property so that your property is, if the person doesn't make the payment to you, you can seize the property. That does take a little bit of money. So if you're doing this in any retirement account, you want to make sure you have your reserves just as you would have your reserves outside of the retirement account. These are generally not long-term commitments. We're talking probably 5 years. The immediate return with a trust deed, the minute that you get it, you're going to get a payment. Unlike a rental house that goes vacant, we don't care as trust deed investors whether the house is rented or not, because that's not our problem. We're just the bank, and we just get a payment every time. The yield is steady. The yield is higher than you're going to get anywhere else. It can be 8 to 10% with some points. It's a low risk investment because you have that ability to foreclose on the property, and you will find it to be less stressful than owning real estate. When you own real estate, you have to worry about getting it rented. You have to worry if the property manager's doing it right. In this, you just have to check to make sure that your check is deposited every month. Now, given that, trust deed investing is part of our diversification. It is my opinion that you will make more money by actually investing in real estate But we have to diversify, and having some money in trust deeds and having that income coming in steadily every month without worrying about vacancies and repairs is a wonderful thing. Okay, as I mentioned, it removes the stress of investing. A lot of landlords become former landlords just for that reason. Like I said, you're going to make more money in real estate, but having investments in trust deeds is part of the diversification and what we need to do, and it's a pretty much a worry-free approach, and you're still investing in real estate. Okay, let's talk about how it works. An investment company or an individual will identify a house that is suitable to be purchased. It'll either be a foreclosure, an REO, or a distressed property. They buy that property cheap, less than the market value. They then rehab the property to meet whatever the standards are for whatever city and state that it's in. They bring all of the electric, plumbing, sewer, everything right up to standards. If the roof's over 10 years old, they probably will replace the roof. Then they rent the house to start the cash flow. You either can rent it conventionally or you can rent it through HUD or a Section 8 approved tenant. The investor purchases a promissory note secured by that house. That's us. What we do is take a loan. We give the money to the investor. The investor in turn gives us a promissory note. There's a recorded deed of trust. We have title insurance in our name. We have the hazard insurance in our name. You go through an escrow process where all the money is handled through escrow and all of the recordings and all of the paperwork is done appropriately. The reason we have hazard insurance is if the house burns down, we are the ones that get paid, which protects our investment. Again, you get that immediate return on investment called points. Could be from 2 to 4 points. You're paid that in cash at the start, and the interest rate is much higher than you're ever going to see in a CD, a bond fund, or many other type of static investments. Now, what is security? We talked a bit about the security, but here it is defined by a promissory note. You have a recorded deed of trust. You have the title insurance policy, and you have the hazard insurance in your name. You have the same power, the same responsibilities, and the same protection that any bank has that loans money to an investor. In many cases, you don't want to have to foreclose on the property, but oftentimes that is not a bad thing to have happen to you. You may go 2 or 3 months without payments, but you'll end up owning a house free and clear for your troubles. It's not what we want as trust deed investors, but you also have to look at what the worst case scenario can be, and the worst case scenario is you now own the house. It's not a bad thing. Okay, here's an example. This was a house in Jackson, Missouri, Mississippi, that was purchased for $37,000. The investor, you and I, we got a $1,480 investment fee up front. Over the period of time, the 5 years at 9%, we returned $16,650 for an almost 10% return on investment. Again, much better than you're going to get anywhere in the market through conventional CDs or funds or anything else. This is a perfect way to use your self-directed IRA and solo 401ks to invest. Keep it in mind when you invest with your solo 401k or self-directed IRA, none of that money is taxable. All right, here's my contact information. Here's my phone number. Please feel free to call me. There's absolutely no obligation. I love talking to investors. I love talking to people that are starting out. I love pointing out to people that creating passive income is the way that we are able to retire. Once you have enough passive income that replaces your income from work, you no longer need to go to work. So give me a call or email me, and we can set up a time to chat.